Hello and welcome back to Magic Indicator Strategies. In today's special episode, we're unlocking the treasure trove of trading wisdom with the 30 most powerful TradingView indicators that are absolutely essential for your trading arsenal. Whether you're a day trader looking to capture those swift market moves, a scalper aiming for precision in the heat of the moment, or a swing trader strategizing your next big play, we've got you covered. We've meticulously combed through TradingView to bring you the highest quality of indicators. These aren't just your run-of-the-mill tools. These are game changers, recently released developments, thoughtfully selected to enhance your trading strategy, improve decision-making, and, if used correctly, skyrocket your trading performance. But wait, there's more. Not only will we unveil these incredible tools, but we'll also guide you through how to effectively use them, combining technical prowess with practical insights. We're talking about leveraging the power of chart indicators to catch market momentum, mastering liquidity and smart money concepts for trend identification, decoding oscillators to pinpoint market reversals, and so much more. So, if you haven't already, hit that subscribe button and ring the bell to stay updated with our latest insights, strategies, and market analyses. Let's kick things off with our 30th powerhouse indicator on the list, Most on RSI by Kivance Ozbilgic. This powerful indicator is an improved version of the classical RSI. The indicator uses a variable index dynamic moving average, which is applied to RSI. Most added to RSI has a moving average of RSI and a trailing percent stop level of the moving average that can be adjusted by changing the length of the MA and percent of the stop level. A buy signal is generated when the moving average line crosses above the most line. A sell signal is present when the moving average line crosses below the most line. The Most on RSI indicator is advised to use in the sideways market. However, the tool can also be useful in trending conditions. Using it as a first confirmation indicator is a good idea. A simple but effective strategy is to combine the Most on RSI with supply and demand and trend lines. For example, to initiate a buy trade, first check if the price is near a demand zone, a zone that caused price rejection a few times in the past. Connect price lows and highs. Ensure the channel is ascending. You can use a long signal from the Most on the RSI oscillator for final confirmation of your stock purchase. Whenever the moving average crosses below the Most line, you should close part of your position. You can achieve a consistent 60 to 70% win rate on 5-15-minute timeframes with this simple trading strategy. Alright, let's move on to the next indicator on our list, the Trade's Daily Bias by Trade for OPP. This powerful tool aims to develop a higher timeframe bias and collect data on its success rate. This indicator focuses on one specific method that utilizes previous highs and lows. Each new day starts by drawing out the PDH and PDL levels. They start out as blue and turn red once traded through. These are the default colors, which can be changed in the indicator's settings. The triangles you see are plotted to indicate the time at which PDH or PDL was traded through. This color scheme is also applied to the table in the top right. Once a bias is determined, that cell's color starts out as blue and turns red once the level is traded through. The table indicates the success rate of price hitting the levels provided by each period's bias, followed by the success rate of price closing through said levels after reaching them, as well as the sample size of data collected for each scenario. In the above Solana 5-minute chart, we can gather a lot of information from the table in the top right. First, we may note that the PDH cell is red, which indicates that the current day's bias was targeting PDH, and it has already traded through that level. As an example of how to read the table's data, we can look at the PDH row of the Solana chart above. The sample size here indicates that there were 19 instances where the daily bias was assigned as PDH. From this sample size, 89.4% of instances did go on to trade through PDH, and only 47% of those instances actually went on to close through PDH after hitting that level. Based on this information, you can anticipate the potential winning ratio if you decide to target the PDH. Of course, greater sample sizes and therefore greater statistical significance may be derived from higher timeframe charts that may go further back in time. The amount of data you can observe may also depend on your TradingView plan. The 28th indicator on our list is called Market Structure Intrabar by Algo. The Market Structure Intrabar indicator is designed to automatically detect and highlight real-time intrabar market structures, a core component of the smart money concepts methodology. The proposed indicator gives a detailed picture of the most recent candle's lower timeframe trends, highlighting market structures within them. This can be particularly useful to assess the price dynamics within the most recent candle. For example, we can see how pronounced a trend is by the number of opposite bullish/bearish market structures formed within the candle. Market structures allow determining trend continuations as well as trend reversals in the market through two distinct structures: change of character and break of structure. Change of character refers to a shift in the market behavior of a security that is driven by changes in the underlying supply and demand dynamics. CHs are indicative of confirmed reversals. The break of structure refers to the point at which a key level of support or resistance is broken. BOSs are indicative of confirmed trend continuation. This indicator can be used to confirm the signals given by the first confirmation indicator. For example, if the first confirmation tool gives a buy signal, it is essential to check the market structure within the candle bar. A buy trade can be initiated only if a bullish bias is dominant. In other words, there are more bullish BOS and CHs than bearish. Try this tool on different markets, but remember, it can only be used in high time frames. Next up on our list is Ghost Tangent Crossings by Chart Prime. Ghost Tangent Crossings is a revolutionary way to visualize pivot points and zigzag patterns that utilizes ellipses. This indicator makes sure that each pivot is plotted from high to low, ensuring a correct zigzag wave pattern. Before a zigzag is confirmed, Ghost Tangent Crossings plots an estimate of the next valid move, allowing you to plan well ahead of time. Once it is confirmed, the indicator will fill in the plot with a solid color and print a break label. Unlike other zigzag or pivot point indicators, Ghost Tangent Crossings only has a pivot look-forward input. This is because the look-back is automatically adjusted based on the last known zigzag. This allows the indicator to dynamically look for the most recent valid market movement. The equipoint is calculated as the point along the ellipse with an equal change in price on either side. From this point, a line is plotted with the slope at that location, and when the price breaks this level, a break label is displayed. Alternatively, you can plot this point as a horizontal line. This area works as support and resistance for the market, as well as the point where the balance in movement is found. This is a simple and elegant solution to connecting zigzag patterns that utilizes a novel method of visualization that many traders will find useful. The 26th indicator on our list is also by Chart Prime. It is called Momentum Ghost Machine. By the way, it can be combined with Ghost Tangent Crossings to find accurate trade entries. Momentum Ghost Machine is designed to be the next generation in momentum, rate of change analysis. This tool utilizes the properties of one of our favorite filters to create a more accurate and stable momentum oscillator by using a high-quality filtered delayed signal to do the momentum comparison. This indicator has a few extra features that other momentum ROC indicators don't have. One major yet simple improvement is the inclusion of a moving average to help gauge the rate of change of this indicator. As mentioned earlier, this oscillator can be combined with Ghost Tangent Crossings. The strategy is simple. A breakout signal issued by the Ghost Tangent Crossings indicator is valid if it is confirmed by the bullish histogram on the momentum ghost machine. It is also vital to check for supply and demand levels before initiating a trade. Test these powerful indicators in the timeframes you're willing to trade. Let's move on to the next indicator on our list, the Adaptive Moving Average Signals by Zierman. The Adaptive Moving Average Signals indicator enhances the classic concept of moving averages by making them adaptive to the market's volatility. This adaptability makes the AMA particularly useful for identifying market trends with varying degrees of volatility. The core of AMA's adaptability lies in its efficiency ratio, ER, which measures the directionality of the market over a given period. The ER is calculated by dividing the absolute change in price over a period by the sum of the absolute differences in daily prices over the same period. The AMA signals indicator is particularly useful because of its adaptability to changing market conditions. Unlike static moving averages, it dynamically adjusts, providing more relevant signals that can help you capture trends earlier or identify reversals with greater accuracy. Its flexibility makes it suitable for various trading strategies and timeframes, from day trading to swing trading. It is especially effective in consolidating markets. Overall, a great tool to use as a first confirmation in your strategy. Try it out. The 24th indicator on our list is called the Liquidity Trend Line, with signals by Stratify Trade. The Liquidity Trend Line is an indicator developed to identify potential breakouts by making use of pivot points. These pivotal moments can trigger significant market reactions, either by breaking out or by serving as breakout and retest signals. As shown in the example, breakouts can be powerful points to see reversals in the market and can lead to a lot of volatility as well. When a trend line is broken, a signal will be plotted. A trend line is formed when two consecutive pivot points are found, each of them lower or higher than the previous one. This is the anchor point for the trend line that the indicator will use to spot rejections or breakouts. The delay in the creation of those trend lines will be the period input used to find the pivot point on the chart. Another good example is using these trend lines as simple retests. Price bouncing on top of them will suggest a possible continuation of the current trend. We can filter out stronger breakouts by looking at how many times the price has rejected the trend line. More rejections will result in more liquidity once the price breaks it. Signals are plotted on the chart for every breakout that happens. Another good utility is simply using them as a retest once the price breaks those levels and holding above or below them, indicating a possible support or resistance area used for confluence. Next up, we have a super powerful indicator called the Squeeze Momentum Deluxe by Eli Cobra. This is a next-generation squeeze momentum index built with momentum, volatility, and price action. This script offers a suite for both mean reversion and trend-following analysis. The Squeeze Momentum Deluxe consists of the following components. First, the momentum oscillator, which quantifies the relationship between price and its extremes over a defined period. By normalizing the calculation, the values become comparable throughout time and across securities. This allows for a more accurate assessment of bullish and bearish momentum. The second component is squeeze bars. The original squeeze concept is based on the relationship between the Bollinger Bands and Keltner Channel. Once the BB is located inside the KC, a squeeze occurs. By understanding their fundamentals, a novel form of calculation can be deduced. The third component is directional flux. This component measures the overall direction of price volatility, offering insights into trend sentiment. Presented as waves in the background, it includes an overflux feature to signal extreme market bias in a particular direction, which can signal either exhaustion or vital continuation. The next feature is the confluence gauges. Placed at the top and bottom of the indicator, These gauges measure the confluence in the relationship between the momentum oscillator and directional flux. They provide traders with an easily interpretable visual aid for detecting market sentiment. The fifth component is real-time divergences. Equipped with a custom algorithm, the indicator detects real-time divergences between price and the oscillator. This dynamic feature enhances your ability to spot potential trend reversals as they occur. Overall, this is a great oscillator to test out. It gives early trade signals, however, I strongly advise to use it in conjunction with price action analysis, like multi-timeframe support and resistance, trend lines, etc. Trailing Management by Zierman is the 22nd indicator on our list. The Trailing Management Indicator is designed for those of you who seek an automated and dynamic approach to managing trailing stops. It helps you make systematic decisions regarding when to enter and exit trades based on the calculated risk-reward ratio. By providing a clear visual representation of trailing stop levels and risk-reward metrics, the indicator is an essential tool for both novice and experienced traders aiming to enhance their trading discipline. This powerful indicator integrates a break-even curve feature to enhance its utility in trailing stop management and risk-reward optimization. The break-even curve illuminates the precise point at which a trade neither gains nor loses value, offering clarity on the risk-reward landscape. Furthermore, this precise point is calculated based on the required win rate and the risk-reward ratio. This calculation aids you in understanding the type of strategy you need to employ at any given time to be profitable. In other words, you can, at any given point, assess the kind of strategy you need to use to make money, depending on the price's position within the risk-reward box. The indicator establishes the direction of the market trend by comparing the index of the highest high and the lowest low within the look-back period. For example, let's say the price is at the midpoint of the risk-reward box. This means that the risk-reward ratio should be 1, and the minimum win rate of your strategy is 50% to break even. I think this tool is a great addition to your existing strategy. Try it out. The 21st indicator you should definitely add to your collection is called the ICT concept, Trading Finder Order Block, FVG Liquidity Sweeps by TF Lab. The main objective of the ICT trading strategy is to combine price action and the concept of smart money to identify optimal entry points into trades. However, finding suitable entry points is not the only strength of this approach. With the ICT style, traders can better understand price behavior and adapt their trading approach to market structure accordingly. Numerous concepts are discussed in this style, but the key practical concepts for trading in financial markets include order block, liquidity, and fair value gaps. Order blocks are a specific type of supply and demand zones formed when a series of orders are placed in a block. These orders could be created by banks or other major players. Banks typically execute large orders in blocks during their trading sessions. If they were to enter the market directly with a small quantity, significant price movements would occur before the orders are fully executed, resulting in less profit. To avoid this, they divide their orders into smaller, manageable positions. You should look for buy opportunities in demand order blocks areas and sell opportunities in supply order blocks. Liquidity levels are where traders aim to exit their trades. Market makers, or smart money, usually collect or distribute their trading positions near levels where many retail traders have placed their stop-loss orders. When the liquidity resulting from these losses is collected, the price often reverses direction. To identify the fair value gap on the chart, one must analyze candle by candle. Focus on candles with large bodies, examining one candle and the one before it. The candles before and after this central candle should have long shadows, and their bodies should not overlap with the body of the central candle. The distance between the shadows of the first and third candles is called the FVG range. Overall, this is a great tool to have in your arsenal. Add it to your favorites, and let's move on to the indicator number 20. Open Liquidity Heat Map by Stratify Trade. Open Liquidity Heat Map is an indicator designed to display accumulated resting liquidity on the chart. Unlike any other liquidity heat map, this aims to accumulate liquidity at specific levels that build up over time, showing larger areas of liquidity. The levels are calculated like a normal volume profile with steps, from the highest point within the lookback to the lowest one. Each level contains the corresponding amount of volume the candle has closed in that range. Unlike many liquidity indicators that provide a single candle liquidity heat map, this aims to add up liquidity in already present levels. This can be extremely useful to see which levels are likely to be more liquid and tend to get a bigger reaction to the price. Imagine it like a range of levels that each time price revisits that area, a new position area is added. Volume is added in that area each time the price visits that zone. Liquidity builds up in those zones, causing a bigger reaction to the price once the price approaches them. This tool can be a great enhancement to your existing strategy, and you should definitely add it to your collection. On the 19th place, I put an indicator called Market Structure Algo by Omega Tools. Not going to lie, this free tool looks like a premium Lux Algo indicator. This advanced indicator is designed to analyze the market structure through a combination of pivot highs and lows, creating a deeper understanding of potential market movements. The MS Algo distinguishes between internal and external market structures by analyzing pivot points over different periods. This dual analysis allows for better understanding of short-term and long-term market trends. The indicator introduces a unique approach to displaying potential areas of interest or zones around pivot points, adjustable through the zone distance setting. Utilizing a comprehensive algorithm, the MS Algo identifies potential signals for entering and exiting trades based on the internal market structure. These signals are visually represented on the chart, aiding in decision-making. These signals are based on the acceptance and confirmed breakout, or the refusal of the pivot points by the price. To apply the MS Algo to your TradingView charts, adjust the internal MS and external MS settings to align with your analysis preferences. The zone distance input allows for customization of the zone visualization feature. Next up on our list is Trending RSI Chart Prime. Trending RSI takes a new approach to RSI and is designed to provide all of the missing information that traditional RSI lacks. Questions such as why does the price continue to decline even during an oversold period can be answered using Trending RSI. These types of movements are due to the market still trending, and traditional RSI cannot tell traders this. Trending RSI fixes this by introducing trend information back into the oscillator. By reverse engineering RSI, the creators have been able to make a new indicator that is no longer bound between 0 and 100. Instead, it provides the traditional 70 and 30 zones as bands, and 50 as a center line that still represent these zones perfectly. This transforms the RSI into a centered oscillator instead of a normalized oscillator. When the market is trending, the trending RSI represents this as the center line being below or above 0. Just like MACD, the center line is colored to represent market phases. This helps in identifying reversals more clearly by adding a layer of confluence to the already renowned RSI. Chart Prime team have also included a novel filtering technique that has a low lag to smoothing ratio. This is primarily used to smooth the bands by default, but you can also utilize this on the RSI. Several alerts have been included to provide you with easy-to-configure signals. You can use the center line as a directional filter for your trades by only picking trades in the direction of the center line. When the center line is above 0, the market is trending up. Conversely, when the center line is below zero, the market is trending downtrend. Use the polarity of the center line to estimate the strength of retracements from the oversold and overbought zones. Standard divergences are also incorporated, which are fully configurable in the settings. The 17th indicator you should absolutely test out is called the ICT Kill Zones Toolkit by Algo. The ICT Kill Zones Toolkit is an advanced set of tools designed to assist you in pinpointing key trading zones and patterns within the market. The ICT Kill Zones Toolkit includes the following price action components: ICT kill zones with pivot highs and lows, order blocks, breaker blocks, fair value gaps, and market structure shifts. By combining these components, the ICT Kill Zones Toolkit offers you with a complete framework for analyzing the market and identifying setups of interest. Leveraging these tools effectively can enhance your decision-making process and improve kill zones interpretability. In Forex future trading, timing is crucial. ICT kill zones are specific periods when there's a higher chance of finding setups of interest. Mastering these time intervals can offer significant advantages to traders who know how to use them effectively. Here's how you can utilize the ICT Kill Zones Toolkit. We can see in the following example that when price retests setups generated from kill zones such as order blocks or fair value gaps, a potential strategy could be to look for entries on those and take profits as the next kill zone appears. Order blocks are sections on a price chart where notable buying or selling activity has occurred, often signaling interest zones for institutional traders. This toolkit's order blocks component pinpoints these areas within the kill zone, which may act as potential support or resistance levels. Breaker blocks, on the other hand, are zones built from mitigated order blocks and highlight zones on the chart where price has previously stalled or reversed. These areas may act as significant barriers to price movement in the future, and the breaker blocks component helps traders identify them for potential trading opportunities. Apart from the features mentioned above, this tool also offers market structure shifts, fair value gaps, and sessions on the chart. This is a must-have indicator for every price action trader. On the 16th place, I put an indicator called ATR bands, Keltner channel, Wick and SRSI signals by MW Wright Inc. This indicator uses an innovative combination of ATR bands, candle wicks crossing the ATR upper and lower bands, and a baseline, and combines them with the stochastic SRSI oscillator to provide early buy and sell signals in uptrends, downtrends, and in ranging price conditions. Bollinger Bands and Keltner Channels concepts are generally understandable. Buy at the bottom band, sell at the top band. However, because the bands themselves are not static, impulsive moves can make them useless. The wicks are also quite easy to understand. Candles with large wicks can represent a change in pattern or volatile price movement. Combining those two to determine if the price is reaching a pivot point is relatively novel. When stochastic RSI filtering is also added, it becomes a genuinely unique combination that can be used to determine trade entries and exits. For example, in an uptrend, when the price is forming higher highs and higher lows, or when the baseline is rising, the price tends to oscillate between the upper band and the baseline. In this case, the baseline buy signal, B3, can show an entry point. In a downtrend, when the price is making lower highs and lower lows, or when the baseline is falling, the price tends to oscillate between the baseline and the lower band. In this case, the baseline sell signal, S3, can show an entry point. During consolidation, when price is ranging, price tends to oscillate between the upper and lower bands, while crossing through the baseline unperturbed. Here, entry points can occur at the upper and lower bands. When all conditions are met at the lower band during consolidation, a buy signal, B, can occur. This signal may also occur prior to a breakout of consolidation to the upside. When all conditions are met at the upper band during consolidation, a sell signal, S, can occur. The 15th indicator is called the Auto Chart Patterns by Trendoscope. This magic indicator will do all the heavy lifting for you in terms of identifying various price patterns. This indicator can identify up to 15 different patterns and display them on the chart. Each pattern, whether it's a wedge or ascending channel, is formed using a zigzag, hence by connecting highs and lows. These price patterns can be classified into bullish and bearish. Once a price pattern has been formed, you can use it to make a trading decision, to buy or sell. This indicator saves you a lot of time. However, I would strongly advise using it in combination with volume indicators, supply and demand, and various oscillators discussed previously in this video. Next up is the liquidation levels with liquidity sweeps, breakouts by Algo Alpha. The heart of this indicator lies in its ability to track and highlight liquidity levels derived from swing pivots and sweeps across multiple timeframes. By calculating relative volume against a user-defined threshold, it identifies strong volume movements indicative of liquidity breakouts. This helps filter out fakeouts. When a liquidity level is breached but not completely mitigated, it's either marked as a bullish or bearish sweep, which comes with the option to show an estimate of the number of liquidations during the sweep. To maximize your trading efficiency with the liquidity levels with liquidation sweeps indicator, follow these simple steps. Access the indicator settings to personalize the timeframe multiplier, high volume threshold, and relative volume period. Tailor these settings to match your trading strategy and chart preferences. Once you're done with the settings, monitor the chart for liquidity levels and sweeps. Bullish sweeps are marked with green labels, bearish sweeps with red, and breakouts are highlighted by the chart background. Enable alert conditions for liquidity breakouts and sweeps within the indicator's settings. This feature allows you to receive real-time notifications, helping you to act promptly on trading opportunities. For better results, use this indicator in combination with volume profiles, trend channels, and oscillators. Next up on our list is the Predictive Channel Signals Indicator by Eagle V Sniper. This script is a powerful tool designed to enhance trading strategies by incorporating predictive channels, multiple moving average types, and dynamic signal generation. The script is meticulously crafted for traders who seek to identify potential support and resistance levels, anticipate market reversals, and optimize entry and exit points through advanced technical analysis. The script calculates predictive channels based on price movements and volatility, represented by adjustable factors for sensitivity and slope. These channels adapt to changing market conditions, providing real-time support and resistance levels. You can select from a variety of moving average types. This flexibility allows you to tailor the analysis to your specific strategy and market view. The indicator generates buying and selling signals based on the interaction between moving averages and predictive channels. Signals are categorized into low, mid, and high tiers, indicating the strength and potential risk/reward of the trade opportunity. High-strength signals are highlighted with 3 circles, middle strength with 2 circles, and weak signals are highlighted with 1 circle. In practice, before opening a long trade, it is essential to check for the following confluences. First, the trend channel is ascending. Second, the price is closed above the moving average. Third, the indicator produces a strong buy signal. Trend channel lines can serve as profit targets. The 12th indicator on our list is called the Liquidity Sweeps Lux Algo. The Liquidity Sweeps indicator detects the presence of liquidity sweeps on the trader's chart, while also providing potential areas of support and resistance or entry when liquidity levels are taken. In the event of a liquidity sweep, a sweep area is created which may provide further areas of interest. A liquidity sweep occurs when the price breaks through a liquidity level, after which the price returns below or above the liquidity level, forming a wick. The script provides two options when this can happen. A wick passes a liquidity level, after which the price quickly returns. B. First, the closing price breaks through a liquidity level. After a while, the price retests the liquidity level and forms a wick in the opposite direction. Instead of a dotted line, this type of liquidity sweep is represented by a dashed line. When a liquidity sweep occurs, this is indicated by highlighting the wick liquidity level distance. This distance is also the basis for the sweep area. A small 3-bar long dotted line starts from the opposite wick as an extra aid to determine potential support, resistance, or trade entry. Overall, this is a great tool to have in your collection. Save it for later, and let's move on to the next indicator on our list. This tool is similar to the previous one, however it does have a few differences. It's called Liquidity Sweeps by Algo. Just like Algo's script, this tool aims to identify and visualize potential liquidity sweeps in the market, assisting traders in spotting significant price levels where liquidity may be targeted by large orders. The script highlights pivot points and draws support and resistance lines based on user-defined parameters. When a liquidity sweep occurs, the script dynamically adjusts the displayed lines and provides annotations, signaling potential buying or selling opportunities. Liquidity areas waiting to be swept are shown as pivot high in red and pivot low in green. One of the most effective strategies is to wait for a liquidity area to be swept first. Then open a trade in the same direction on the liquidity level retest. Remember, the candlestick has to close below the liquidity level for short trades or above the liquidity level for long trades. Look at the following examples of long and short trades. The 10th most powerful indicator on TradingView is called the Imbalance Algo by Trader. This indicator is so good that on the Solana 15 minutes time frame, it has a winning ratio of over 90%, with a total profit of around 9%. This is by risking only 1% of your account. With such a high win ratio, you can increase the risk up to 5%. But remember, forward testing with virtual money comes first. Don't skip this part. Trade with this indicator on a demo account by simply following these buy and sell signals and stop loss/take profit recommendations. Once you get used to the strategy and satisfied with the results, you can try it on a real account. To make things easier, you can add alerts for these buy and sell signals. In the indicator's inputs, you can customize its sensitivity, risk per trade, trade management, and more. On the 9th place, I put an indicator called All-Time High Levels by your favorite creator, Algo. The All-Time High ATH Levels indicator displays a user-set amount of historical all-time high levels made on the trader's chart, highlighting potential key price levels. Displayed levels can be filtered out based on their duration, as well as their relative distance from each other. This simple but effective indicator also evaluates the role a level might have as support or resistance using a percentage, classifying ATH levels as either support or resistance depending on the result. You see, market participants pay high attention to all-time highs made by certain assets, with the most pertinent example being Bitcoin. Previous all-time highs can play critical roles as psychological price levels, with the most recent ones often offering major resistance points and older ones being used as support. You can filter out temporary ATHs using the ATH minimum duration setting, removing any ATH that lasts less than your specified number of bars. Higher values of this setting effectively preserve ATHs that become distinguishable peaks. These can offer more significant support and resistance levels. When displaying each historical level, some of them can be very close to each other. You can use the minimum distance between ATH setting to filter out levels too close to each other, with higher values of this setting returning more spaced levels. I think this indicator can play a significant role in your existing strategy. Add it to your favorites, and let's move on to indicator number 8. This script is called the Price Action Volumetric Order Blocks by Stratify Trade. The Price Action Volumetric Order Blocks indicator is designed to present a different approach to normal order blocks, providing volume inside metrics used to spot stronger and weaker order blocks, their own volume, and much more, adding a good extra chunk of confluence. The following example shows how a bearish order block can have more bullish volume or more bearish volume. Nothing really changes. In fact, the order block is still bearish in this case. The only thing that changes is the volume. This can be used as a confluence to know which side was traded at that specific level. Bearish order block with more bullish volume indicates that buyers reached exhaustion at that level and can be considered as a stronger order block. Bullish order block with more bearish volume means that sellers lost interest at that level and can be considered as a stronger order block. As we see in the next example, stronger order blocks will have a higher chance of holding better and giving stronger rejection. Thanks to this, we can avoid weak order blocks and eliminate potential losses. On the 7th place, I included an indicator similar to Imbalance Algo. This one is called Orb Algo by Flux Charts. ORB stands for Opening Range Breakout, which is a common trading strategy. The indicator can analyze the market trend in the current session and give buy and sell, take profit and stop loss signals. This indicator works best in 1-minute time frame. The idea is that the trend of the current session can be forecasted by analyzing the market for a while after the session starts. However, each market has its own dynamics, and the algorithm will need fine-tuning to get the best performance possible. So, the creator has implemented a backtesting dashboard that shows the past performance of the algorithm in the current ticker with your current settings. Currently, we're on Ethereum on the 15-minute chart. The algorithm achieved a win rate close to 60%. I strongly suggest adjusting the algorithm settings individually for every asset and time frame. 6th in my ranking is a super powerful indicator called Session Sweeps by Lux Algo. This is an absolute must in your collection. The Session Sweeps indicator is an innovative tool that combines ICT-based features for a complete trading methodology involving market sessions, market structure, and fair value gaps to find optimal entry conditions for trading price action. Traders frequently tend to place stop or limit orders at the high and low points of major trading sessions, such as Asian, European, and North American, resulting in the establishment of liquidity pools at those particular levels. The Session Sweeps indicator is crafted to recognize and highlight occurrences of session sweeps or liquidity sweeps during these major trading sessions. If the price briefly crosses either the highest or lowest point of a market session, these movements aimed at triggering stop losses suggest potential shifts in the market direction. Detecting such movements is the fundamental purpose and core functionality of this powerful indicator. A market structure shift refers to a change in market direction, either from an uptrend to a downtrend or vice versa. A part of a common entry model when using session sweeps is waiting for the formation of a change of character after a session sweep. After the formation of a CHOCH, you can enter a position when the price enters the area of a fair value gap. This entry setup is commonly used by ICT traders. It works in short time frames like 5 and 15 minutes. Next up in my ranking is an indicator called the GAN box by Zierman. The GAN box is an indicator that generates visual insights using the principles of W.D. Gann's trading methods. Gann's techniques are based on geometry, astronomy, and astrology, and are used to predict upcoming price levels and market trends. This indicator helps traders identify potential support and resistance levels and forecast future price movements. Gann used angles and various geometric constructions to divide time and price into proportionate parts. Gann indicators are often used to predict areas of support and resistance, key tops and bottoms, and future price moves. The indicator operates by identifying high and low points within a visible range on the chart and drawing a Gann box between these points. The box is divided into segments based on selected percentages, which represent key levels for observing market reactions. It includes options to display labels, a Gann fan, and Gann angles for analysis. Advanced features allow extending the box into the future for predictive analysis and reversing its orientation for alternative viewpoints. Using a Gann angle to forecast support and resistance is probably the most popular way they are used. This technique frames the market, allowing the observer to read the movement of the market inside this framework. The fourth place of the most powerful indicators belongs to the Periodic Activity Tracker by Lux Algo. I promise you have not seen such a volume indicator before. The Periodic Activity Tracker tool periodically tracks the cumulative buy and sell volume in a user-defined period and draws the corresponding matching bars and volume delta for each period. This tool provides a simple and clear way of analyzing volumes for each aggregated period and is made up of the following elements: buy and sell volumes by period as red and green lines with color gradient area, delta, in other words, difference between buy and sell volume for each period, buy and sell volume bars for each period, separator between lines and bars, and period tags below each pair of bars for ease of reading. In trading, assessing the strength of the bulls and bears is key to understanding the current trading environment. Which side, if any, has the upper hand? To answer this question, some traders look at volume in relation to price. This tool provides you with a view of buy volume versus sell volume, allowing you to compare both sides of the market. As with any volume tool, the key is to understand when the forces of the two groups are balanced or unbalanced. As we can observe in the following chart, buy volume greater than sell volume, both moving up close together, flat delta. We can see that the price is in range. Then we see that buy volume gets bigger than sell volume, both moving up, but with a bigger difference. The price breaks out of the range. Finally, buy volume explodes higher and sell volume cannot keep up, a big growing delta. Price explodes higher above yesterday's range. You need to understand that there is always an equal number of buyers and sellers in a liquid market. The quality here is how aggressive or passive they are. Who is attacking and who is defending, who is using market orders to move prices, and who is using limit orders waiting to be filled. On the third place, we have a very fascinating indicator called the Fibonacci Archer Box Chart Prime. Fibonacci Archer Box is a full-featured Fibonacci box indicator that automatically plots based on pivot points. This indicator shows retracement levels, timelines, fan lines, and angles. Each one of these features are fully customizable with the ability to disable individual features. A unique aspect to this implementation is the ability to set targets based on retracement levels and time zones. This is set to 0.618 by default, but you can pick any Fibonacci zone you like. In addition, you will find markings that indicate when Fibonacci levels have been met or exceeded. These moments are plotted on the chart as colored dots that can be enabled or disabled. Along with these markings are crosses that can be shown when targets are hit. Both of these markings are colored with the related Fibonacci level colors. Overall, the Fibonacci Archer Box is a new indicator that incorporates Fibonacci retracements and projections with an automated pivot point-based plotting system. While it acknowledges the methodologies of W.D. Gann, it distinctively utilizes Fibonacci techniques, providing an effective tool for market analysis. The second spot in our ranking goes to the price action fractal forecasts by Algo Alpha. Check out how futuristic this indicator looks. This innovative tool utilizes the mesmerizing complexity of fractals to predict future price movements, offering you a unique edge in the market. By analyzing historical price action and identifying repeating patterns, this tool forecasts future price trends, providing visually engaging and actionable insights. The core of the price action fractal forecasts lies in its ability to compare current market behavior with historical data to detect similar patterns. It first establishes a training data window to analyze historical prices. Within this window, it then defines a reference length to identify the most recent price action that will serve as the basis for comparison. The indicator searches through the historical data within the training window to find segments that closely match the recent price action in the reference period. Depending on whether you choose the anticipatory or repetitive forecast mode, the indicator either looks ahead to predict future prices based on past outcomes following similar patterns, or focuses on the repeating patterns within the reference period itself for forecasts. Test this magic indicator in different markets in combination with volume analysis, oscillators, and other price action tools. Finally, let's unveil my most powerful TradingView indicator. This magic tool is called the Trade IQ Toolkit. After years of studying different indicators and price action, the Chart Prime team finally came up with a tool that I believe to be the most effective on the TradingView platform. This is the type of indicator every trader should have in their arsenal to become consistently profitable. We all know that 80 to 90% of trading success comes down to three things. 1. A trading strategy with clearly defined rules that has been proven to work over time. 2. Reliable risk management with consistent stop loss and take profit targets. 3. A solid trading psychology. The Trade IQ indicator will assist you with all these aspects. With this tool, you can build any strategy that suits your needs. What sets the Trade IQ Toolkit apart is its holistic approach to market analysis, providing you with an all-in-one solution. Unlike other indicators that focus on specific aspects of trading, the Trade IQ tool offers a multifaceted approach. It combines price action analysis, trend identification, and volumetric analysis, offering a more comprehensive view of the market than any single indicator you know. It includes features like supply and demand analysis, trade entries with targets and stop losses, and trend lines with breakouts. Additionally, it integrates advanced concepts such as ghost order blocks that predict future support and resistance levels. The indicator settings can be customized to fit individual trading styles, making it a versatile tool for both novice and experienced traders. With the integration of multi-time frame analysis and a market bias dashboard, the indicator contributes to a strategic edge. For those of you who can't wait to try this indicator out, click the first link in the description and get your Trade IQ Toolkit risk-free.